Hey everyone, welcome back to Corporate Decoder. Today we're diving into a financial report that has more numbers than a busy accountant's calculator. Get ready because this filing is packed with details about how an investment fund has been performing. We are looking at a semi-annual shareholder report for the Iman fund. This report covers the period from the 1st of June 2025 to the 30th of November 2025. Think of it as a financial checkup for the fund, telling us what they invested in, how much money they made or lost, and what their overall health looks like. Let's start with what the Iman fund actually put its money into. As of the 30th of November 2025, they were invested in a variety of industries. The report breaks this down, and we see things like semiconductor and other electronic component manufacturing making up a big chunk at 22.9%. Then we have computer systems design and related services at 10.6%, and communications equipment manufacturing at 9.1%. Looking at specific companies, the top holdings in the Iman fund that we see here give us a clue about their strategy. Apple Incorporated is their biggest bet at 8.4%. Alphabet Incorporated, that is Google, comes in second at 7.3%. Microsoft Corporation is also a major holding at 6.7%. Nvidia Corporation is another big one at 6.4%. And Taiwan Semiconductor Manufacturing Company Limited rounds out the top 5 at 6.2%. These are all tech giants showing a clear leaning towards technology companies. Now, let's look at some of the key numbers that tell us about the fund size and how it is being managed. As of the 30th of November 2025, the Iman fund had net assets totaling a whopping $228,224,160. That is a lot of money to manage. The net advisory fee collected was $745,980. The number of holdings was 111, meaning they invested in 111 different companies or assets, and the portfolio turnover rate was 20%. A 20% turnover means they bought and sold about 1/5 of their holdings during this period. This suggests a moderately active management style. Not a buy and hold strategy that rarely changes, but also not a hyperactive trading approach. Diving into the financial statements, we see a lot of detail. The schedule of investments gives us a breakdown of every single holding. This is where you see the actual dollar values and the number of shares held for each company. For example, under common stocks, we see Apple Incorporated listed with 68,600 shares, valued at $19,129,110. That is a substantial position. Then there is Microsoft Corporation with 31,180 shares valued at $15,340,872. These are significant investments and they add up. This statement gives us a snapshot of the fund's financial position on a specific date, the 30th of November 2025. On the asset side, their investments are valued at $227,510,175. They also hold cash, dividends receivable, and other assets on the liability side. They owe money to their advisor for legal fees, administration, and other expenses, totaling $387,587. The net assets, which is what is left after subtracting liabilities from assets, come out to $228,224,160. This figure represents the total value of all the shares in the fund. This is a really important number for investors. It tells you the value of a single share of the Iman fund. On the 30th of November 2025, the net asset value per S-share was $18.97. This is up from $15.76 at the start of the reporting period, which indicates the fund has seen growth in its value over these 6 months. This statement shows us how the fund performed financially over the reporting period. For investment income, they earned $958,457 in dividends. However, their expenses were higher, totaling $1,428,041. After accounting for reimbursements from the advisor, their net expenses were $1,108,336. This means that from its regular income and expenses, the fund had a net investment loss of $180,420 for the period. But investment funds don't just make money from dividends and interest. They also make money when the value of their investments goes up. The Iman fund had a net realized gain from investments of $4,069,983. That means they sold some investments for more than they paid for them. On top of that, they saw a huge unrealized appreciation on their investments, meaning the value of the investments they still hold increased by $32,848,834. When you put all of this together, the fund had a net realized and unrealized gain of $39,185,646. This is the real driver of the fund's growth during this period, more than making up for the net investment loss. This section shows us the overall change in the fund's net assets. From operations, there was a net increase of $39,005,226. This is the profitable part we just discussed. However, there was a decrease in net assets from capital transactions of $6,012,478. This means that more money was redeemed from the fund, or taken out by investors than was invested during this period. Even with that outflow, the overall net assets increased by $32,992,748. Looking at the financial highlights, we can see the fund's performance over several years. For the period ending the 30th of November 2025, the total return was 20.37%. This is a very strong return for a 6-month period. It is significantly higher than the total return of 3.48% for the year ended May 31, 2025 and the 27.66% in 2023. This suggests a very strong performance in the most recent reporting period. This tells us how much it costs to run the fund relative to its size. After expense reimbursement, the ratio was 1.04%. This means for every dollar invested, about 1 cent goes towards operating expenses. This is a reasonable expense ratio for an actively managed fund. Now let's touch on some of the important explanatory notes. The fund is organized as an open-end management investment company, and its investment objective is to seek growth of capital while adhering to Islamic principles. This means they avoid investing in certain industries like alcohol or gambling, and they also steer clear of interest-bearing debt. The fund values its investments at fair value. Most of their investments in this case are common stocks listed on exchanges, which are valued based on readily available market prices. They reported no level 3 assets, which are investments that are hard to value because they don't have easily observable market prices. This indicates a portfolio primarily composed of transparently valued liquid securities. Since the fund intends to distribute all of its taxable income and gains to shareholders, it typically does not pay federal income tax. They are structured as a regulated investment company, meaning they pass through income and gains to investors, who then pay the taxes. The fund has an agreement with Allied Asset Advisors Incorporated to manage its assets. The advisory fee is normally 1.00% of the fund's daily average net assets. However, the advisor has agreed to waive a portion of this fee, reducing it to 0.70% through the 30th of September 2026. This is a positive for investors as it lowers the cost of investing in the fund. They also mention a consulting services agreement where a portion of the management fee goes to their parent company for Sharia compliance matters, adding another layer of specialized oversight. One interesting detail is that as of the 30th of November 2025, NITE held 49.55% of the fund. This means NITE has a significant controlling stake in the Iman fund. Here is my take on what we've seen. The Iman fund had a stellar performance in this reporting period with a 20.37% total return. This was largely driven by strong gains in their investments, particularly in the technology sector, which makes up a significant portion of their portfolio. Companies like Apple, Alphabet, and Microsoft are performing well, and the fund has benefited from that. The expense ratio is quite reasonable, especially with the advisor waiving a portion of their fees. This shows a commitment to keeping costs down for investors. The fact that their investments are primarily valued using observable market prices, with no level 3 assets, suggests transparency and liquidity in their holdings, which is generally a good sign. However, there is a slight concern with the capital transactions. More money was withdrawn from the fund than invested during this period, as indicated by the net decrease in assets from capital transactions. While the overall net assets still grew due to investment gains, a consistent outflow of capital could be something to watch. It might mean investors are taking profits or perhaps looking for other opportunities. Overall, though the strong investment performance is the dominant story here, it shows astute management in a strong market for the fund's chosen sectors. Alright, that is our breakdown of the Iman Fund's latest semi-annual report. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.